Tesla stock has been dropping at a rather significant rate. The automaker's stock price has dropped more than 50% and is currently trading below $200 at the time of this video. A lot's been going on with Tesla, and some investors are wondering if maybe Tesla CEO Elon Musk is distracted with his new venture and not giving Tesla the attention it needs. Hey everyone, and welcome back to Everything Tesla Stock. As of October this year, at least 5 brokerages cut their price target on Tesla stock, citing softer car deliveries in 2022. In the same month, Morgan Stanley analyst Adam Jonas lowered his price target from $383 to $350, owing to perceived production headwinds, which will likely continue. Likewise, Wedbush Securities also made the biggest cut of $60, bringing their target to $300. In this very uncertain moment in Tesla's stock performance, Tesla must prove once again that its robust growth story is running into a series of logistics issues as opposed to reducing demand. And even beyond this, it should also assure investors that Musk's new business, Twitter, does not in any way affect its stock performance. Why has Tesla stock been dropping? Is it because of Twitter? Well, find out in this video. But before we start, if you like this type of content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. While some investors believe that Tesla stock is overvalued, some long-term investors do not really care about how much the stock is currently worth. For the bears, the plunging stock price further causes the stock to seem overvalued. However, for those who are investing in Tesla for the long term, the stock is getting lower, and that means that it's a better bargain. Tesla is the best risk-adjusted opportunity in the stock market. The company's maintained a high profit margin despite the tough market conditions and is still aiming to adopt efficient production processes and increase production volume. A more effective and efficient production process means lower costs and more profit, and Tesla currently maintains the highest automotive gross profit margin of any other car maker. This value came in at 27.9% in the recent third quarter of this year compared to Ford's, which is at 15.7%. Although Tesla has incredible profit margin and overall market performance, there are still fears as to whether Musk's new role as Twitter CEO is affecting Tesla's stock performance. While many think that Musk's recent actions on Twitter are affecting Tesla stock, these events do not seem quite related. Some investors are beginning to doubt Musk's credibility after the new Twitter owner laid off some of the company's former employees, 3,700 of them, almost half of its staff, after he had taken over the company. Musk explained that Twitter's workforce was too large and placed too much emphasis on content moderation, platform safety, product development, and marketing. However, according to recent reports, Twitter is actually asking these guys to come back. And this is actually quite a strange thing. The company asked some of its employees to return as they were laid off by mistake. The report also noted that the company was calling some other employees back after they were critical for building features for the platform that Musk envisioned. While it seemed that Elon Musk is doing too much, the business expert may just be doing what he has to do to set the car company on the right path. Contrary to popular belief that Musk's lack of attention for Tesla may be causing the automaker's price to drop, several other events which have happened in recent months could actually be major factors that are pulling the stock price down, and seemingly putting Tesla's investors' funds at risk. Apart from economic downturns, several other things can put your investment and earnings at risk, one of those being theft. This part of the video is sponsored by Aura. In today's ever-expanding internet space, your data isn't always so safe, and personal and sensitive information can be easily compromised. Identity theft is now the fastest-growing crime in America. In 2020, over 49 million Americans were victims to identity theft, costing them a total of $56 billion. This is why we're excited to partner with Aura, who's the sponsor of this video and also the official digital security sponsor of the Minnesota Timberwolves. Aura is the #1 identity theft and financial fraud security provider. It's also a VPN and password management and antivirus software. Aura monitors the internet and the dark web and then alerts you of any passwords and accounts that have been breached. You can also set up spending alerts and get notified of any suspicious transactions or credit card operations. Try Aura for free for 2 weeks today with no obligations. Start your 14-day free trial at aura.com/Tesla. Now, when you try Aura, using that link in the description below, also know that you're supporting this small YouTube channel and helping us to pay for the production of these videos. It's greatly appreciated. Thank you. Now, back to the video. Factors such as the macroeconomic environment, inflation, and fear of recession may have caused Tesla stock to go down, and none of these have anything to do with Tesla's market performance. Several investors in Tesla worry that the EV maker's growth momentum may have hit a speed bump due to rapid inflation and logistical challenges. Likewise, investment rates hiked by FED has also heightened fears of recession and growing inflation. The FED has lifted from almost zero in March to a range of 3 to 3.25%, and has signaled that it could approach 5% next year. These hikes are intended to curb inflation, which surged to a 40-year high of 9.1% in June and remained above 8% in September. Responding to this, Musk has slammed the US central bank for soldiering on with interest rate hikes, despite what he considers growing signs that the inflation threat is fading. Musk has said during Twitter's third quarter earnings call that the FED is raising rates more than they should, and he thinks that they'll eventually realize and bring it back down. Musk has since announced his intention to buy American social media network Twitter, and Tesla shares dipped more than 35%. Musk announced that he had agreed to buy Twitter on April 25th of this year, and after Twitter said it agreed to be acquired by Musk, Tesla shares ended 0.7% lower. Tesla's stock also plunged after it was reported that Musk agreed to finally go through with his deal to buy Twitter. Musk's sales of some Tesla stock further affected Tesla's stock price. In August, Musk sold about $7 billion worth of Tesla stock, a move which he said was an effort to raise cash in case he was forced to complete his $44 billion deal to acquire Twitter. In this deal and his tweet, Musk explained that he had sold the shares because if Twitter forces the deal to close and some equity partners don't come through, it was important to avoid an emergency sale of Tesla stock. This came after Elon Musk stated on April that he had no further plans to sell Tesla stock, after he had at the time sold about $8.5 billion worth of shares in Tesla to help fund this deal with Twitter. Indeed, Musk has made several crucial decisions during the course of the deal, but none should have intended Tesla's stock price to drop. Twitter and Tesla are both different companies, and therefore Tesla investors should focus on the car company. No doubt Musk will be spending a considerable amount of time working with Twitter, but this is something that he must do to set the company moving at a profitable pace. At the 29th annual Barron Investment Conference that was held recently, hedge fund investor Ron Barron, who's now a Tesla, SpaceX, and Twitter shareholder, asked Elon Musk about juggling new responsibilities as he's now the owner of Twitter. Musk responded by saying that his workload has gone from about 78 hours a week to 120, adding that once Twitter's on the right path, it could be much easier to manage than SpaceX or Tesla. Although Musk has told Twitter followers that his position as sole director and CEO of the social network is temporary, he's yet to disclose if anyone may replace him as the CEO of Twitter. Tesla's fundamentals are still intact, irrespective of Musk's dealings on Twitter. The car company is still focused on achieving autonomy for its cars and is rolling out several of its expected vehicles while increasing its profit margins and raking in more revenue. Do you think his ownership of Twitter is affecting the stock price of Tesla? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you'd like to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.